Hey everyone, I'm Charting Man Dan with the Chart Guys. We're going to check in on the market and how we are shaping up as we look to CPI numbers tomorrow pre-market to add a little bit of volatility into the mix. All right, we got lots to talk about. We're going to look at cannabis, Tesla, metals, whether or not we're seeing rotation out of semiconductors into growth names, IWM. We'll start off with SPY and QQQ, and the bulls got a bit of help today. Again, CPI tomorrow, but we had, who was it, Bullard? One of the Fed people flapping his gums, Bostic. So Bostic, a whole bunch of comments, and you can see pretty much the afternoon was shaped by when he started speaking and the hourly uptrends were confirmed. We started with weakness, daily lower high set on the bounce, and then bulls defending support with Bostic helping out and trying to continue tightening up. It's not surprising whenever you see that kind of candle of volatility and a big bounce after it, you know you're going to look to tighten up. That's why we love equilibriums, because they're so often the most likely scenario. And so the daily lower high is not surprising. To hold the higher low is not surprising. What I care about is, are we going to break the high of the dump day or the low of the dump day? And until one of those levels breaks, we're just chopping around sideways within that range. And you look at the NASDAQ and it's the same story. Topped out on the bounce initially, pulled back, but bulls bought that dip, just still chopping around within the range of that candle. And the reason I'm talking about IWM and semis led the way down, and IWM has been holding on stronger. And so we look at SMH here. SMH itself is fairly sideways, and we could say that the last 2 weeks is the least amount of volatility that SMH has seen. I mean, look at this period here. When's the last time we traded that sideways for 2 weeks? It's been a very long time. So that tells us volatility is coming in semiconductors. But you look at a name like NVDA, it broke its low of Thursday by a lot. Today, NVDA hit the lowest price that we've seen in 5 weeks. That's fairly significant. SMCI coming up to a key support of 855. MU holding on much better. It's still got a 4-hour tightening range at the moment, trying to hold the low of last Friday. And AMD, much weaker. So out of just looking at those 4 names, I would say MU clear lead bull, NVDA or AMD is weaker, then NVDA is weak, and I put SMCI in the middle. But anyways, why I'm watching that is if you look at IWM divided by SMH. So we know semiconductors have led the way up. Look at this chop sideways. This is relative strength. And right now, this is telling us nothing is changing between the two. They're doing the same thing. But I want to know which direction is this sideways range going to break. If this breaks bull, it's rotation into growth names out of semiconductors. If this breaks bear, it's semiconductors continuing to be much stronger than growth names, which has been the case for a very long time. Pretty much for the last 15 months, it's been all semiconductors. And so just something I'm keeping an eye on. One of the reasons I was keeping an eye on it is because I was looking bearish IWM because of this rising wedge, but I don't want to choose IWM to be my bear if it's going to see some rotation here. I want to be looking at perhaps the financial sector bearish, maybe the semiconductors bearish. But again, this is something I'm watching over the next couple of days to see where we go from here between those two major sectors. Just growth in IWM and semiconductors. How is that sideways range going to break? Tesla. So I went long in Tesla to end last week with the news headline. Made a couple social media posts talking about how oftentimes you see at tops and bottoms, you see bullish news no longer moving the price up or bearish news no longer moving the price down. Today you get a downgrade. We're up 2.5%. And also Friday, the headline, Musk clearly getting annoyed and wanting to fire back at the shorts a little bit. But anyways, what matters to me is, my stop's under 160. I need to see the bulls now break 184.25, get us to the highest price that we've seen in over a month to show us that the first baby step towards a 3-month higher low. The reason I'm looking for a long is because for me, it's an equilibrium where a 3-month higher low is the most likely scenario. And I'm just watching for signs that it's trying to shape up. Tesla divided by QQQ, I want to see relative strength. So I want to see this chart get to its strongest relative strength that it's seen compared to the NASDAQ. I mean, essentially the semiconductors shot up. Tesla did not benefit for months and months and months. Now the semiconductors are pulling back and Tesla's trying to head up a bit. So again, same kind of mindset. Is there a bit of an inverse relationship there? And watching to see, does money rotating out of semiconductors, does some of that find a home in Tesla? We'll see. MSOS, so the cannabis sector, again, we're breaking it up into the higher listed names like CGC and ACB, and the US side, the lower listed names. And so TLRY had earnings today with a massive dump. And that dragged down the higher listed names due to correlation. CGC pulling back towards daily support, still holding 893, but if we break 893, we confirm a daily downtrend, and that tells us bulls are done for now. And I say for now because that just means we'll be scouting a weekly higher low eventually, but that will be momentum shifting. ACB broke daily support, but only by a couple pennies. I'm considering that a double bottom at the moment. Still looking for ACB to set a higher low and then an eventual lower high. But you look at names like SNDL, and there's a little daily downtrend confirming. So these higher listed names losing some mojo. GRWG, we talked about in the weekend video, how it was one of the weaker major names. And it's showing us now it's getting to its lowest level in weeks. So seeing some of that momentum fading, and bears want to see CGC break 893 for that to continue. While that's taking place, the US side of things, again in the weekend video, we talked about how the most likely scenario was a 4-hour lower high, then it was a big enough bounce to scout a 4-hour higher low, and the bulls are hoping that that 4-hour higher low is being set. And for that to be the case, you could also go to the daily, just condense it down. Same concept, lower high, trying for that higher low. Also note the similarities with the NASDAQ, right? Big dump day on Thursday, multiple days of bounce, but setting the lower high today, and now a lower wick trying to set the higher low today. You look at SPY or the NASDAQ, it's the same thing. There's absolutely a correlation with the broader market to be keeping an eye on. But still a daily uptrend. So we had the dump day, and that was a daily higher low at 925, and now the bulls are hoping another daily higher low is at 973, but I need a bull break of 1034 to prove that the bulls are still having their control. No red flags, nice recovery from that dump day. I did take some profit into the bounce Friday afternoon, and I will be looking to potentially reload those positions at the same price. You know, it's pretty much at the same price right now. But if the bulls show up tomorrow, if we get a bullish CPI reaction, I'll just do another jump right back in, get a little protective just in case. Coast is clear, jump back in, but still holding core in both MSOS and TCNNF. Financial sector, trying to roll over, but defending support. We held 41.13 by 5 pennies today. If that level were to have broken, it would have been the lowest price in weeks, but it's holding at the moment. Trying to keep the weekly bull flag forming. And so I'm watching. You can see after hours, still riding that momentum from Bostic. But again, just all I care about is those, until one of those levels breaks, high at Thursday or low at Thursday, that's all I care about in the short term. XLF defended support. XLV. XLV had bearish news. I don't trade the healthcare sector. I only watch it for a broader market gauge, one of the inputs. And, you know, we went from all-time highs, and 2 days later, we were at a month lows. So a very clear shift, and there was, you know, bearish news regarding Medicaid. It's about as in-depth as my understanding of the fundamentals goes, but that's all I need to know. There was a headline. We dropped significantly and weakened. It's the weakest major sector right now out of QQQ, XLF, and XLV. But you look at the weekly chart, and the simple statement would be, if the bulls can hang on to weekly EMA 12, they're just fine overall. But definitely stood out, that shift on that news. And IWM approaching the high of Thursday, certainly closer to it than many other names. But again, got to break one way or the other. High or low of Thursday. As soon as one of those levels break, I'll zoom out and look at previous levels from the prior few weeks. But until it happens, it's all about the Thursday dump day. And again, you know the analogy that I give many times, the sucker punch from the bears. So that was the sucker punch from the bears. The bulls got their wits about them. They were ready to fight. They got their bounce. The bears really wanted to confirm that lower low today. If it's a big bear reaction to CPI, it can still happen tomorrow. But again, if we hold that low, bulls don't have anything to worry about. Look at the other times here where that has happened. Big red day, don't break the low of that day, nothing but up. There's been a few times now where a big red day has not followed through, and that marks a bottom before another leg up. So CPI can certainly go either way, but bears must break the low last Thursday to prove something to us. Miners, still watching the crypto miners. CLSK has my attention. It had dilution news last week or maybe 2 weeks ago, but look at this base of support. 15, 1478, 1499, 14 or 1506, and we are right in it now. So if the bulls can shape up an hourly uptrend tomorrow, I might be interested playing off of this support level. But there's still consistent relative weakness in the miners compared to Bitcoin. Bitcoin tested the all-time high yesterday, and these miners, obviously, including MARA, they're just not close to testing recent highs. And so again, it's still a potential place where if you are long crypto significantly, shorting these miners is a great hedge as long as we're in daily downtrends. And again, just look at MARA divided by Bitcoin, testing the weakest it's been in a very long time. Yeah, we're testing the weakest it's been in 14 months. That is a very important level in terms of comparing MARA to Bitcoin itself. The dollar, so I'm watching the dollar. We had this weekly equilibrium break bull technically, but not by much. It's a bull break with no follow through. Anything above 102.35 is a weekly higher low. So still a weekly uptrend, which is my guide for now. The metal bulls are loving how they have been performing in the face of a strong dollar. I mean, gold ripping to all-time highs while the dollar was up at the highest level it's seen in months is definitely a good thing for gold bulls. Silver played the laggard and played some catch-up. And now just watching the weekly uptrend on the dollar, knowing it needs to be lost for metals and miners and crypto to see some ideal scenario. But gold, beautiful breakout and follow through. So just watching a new support level, 2267. You know, I have gold and silver exposure, and I keep looking at this chart and saying, take profit. No, don't take profit. This is a swing position, and you're looking bigger picture. And so knowing that I'm not going to be taking profit before daily consolidation in gold and silver, I'm starting to look at the bear miners as a bit of a hedge play. And you can see gold has been grinding daily EMA 12 for months at this point. And so that's a good guide as well. And silver had a beautiful cup and handle on the weekly. I posted this on Twitter last week. We have resistance, resistance, and I was just viewing this as a cup and handle. And there's your breakout. It acted as a nice laggard to gold. It's been heading up the last few days. New support, 26.28. And breaking multiple year ranges here. And just like that, silver is at almost 3-year highs. Breaking 30.14 would really get things going to try and get to decade plus highs. Very big difference between 3-year highs and 11-year highs. But the miners have a daily stair step of 11 days in a row. So tomorrow, depending on the CPI reaction, may even grab some hedge. Well, we'll see. Probably not. I was going to say before the reaction, but if we get a reaction to CPI where the metals shoot up, on that initial shot up, I would likely use a 1-minute stair step play and then grab a hedge on that, because so many times we see those kind of moves reverse. But just looking at, you know, the bears here, just an 11-day stair step drop. So again, we know a bounce is inevitable eventually here. And, you know, if I had no position, I'm certainly not looking long counter blue sky bulls in gold. It's because I have a position and I'm looking for a potential hedge, knowing I'm not going to sell my swings. Oil, significant strength, daily uptrend is our guide. There was a while where I was looking bearish the energy sector, made an attempt and stopped out. And sometimes people on social media will be like, you were looking at XLE to be a monthly rising wedge and you never talk about it anymore. And the reason that I never talk about it anymore is because I stopped out and I haven't looked at it since because I'm trading other things. I've moved on. I was incorrect of it being a monthly rising wedge, and I was told I was incorrect when I stopped out somewhere around here, and it was a tiny insignificant loss. I forget where I shorted. I probably shorted on the way down, gave it some wiggle room. Nope, I'm wrong. And then you move on. And so congrats to the bulls on the energy sector. It's been a really nice weekly stair-step move, pretty much following the melt-up mode of the market as a whole. But I am still watching oil for a monthly lower high. Anything under 95.03. There's no sign of it. We would have to lose the daily uptrend. We would have to confirm a daily downtrend as the first step towards a potential monthly lower high. But it is still something I'm keeping an eye on over the next couple of months to see if we're going to get this equilibrium continuing to tighten up. But just a good example of, you have a thesis and you make an attempt at the thesis, the market tells you you're wrong, move on. I could ingrain in my thesis and say, no, I'm right. I don't want to get stopped out right before the move and then keep trying to short and trying to short. And that's where you are not listening to the market. You're trying to force your will on the market. And that's something we never want to be doing. Hope you had a great eclipse, went camping, completely detached. Took a little bit to catch back up. Fortunately, not a whole lot went on while we were gone. And we'll see what CPI brings. Watch the ranges from last Thursday dump day and do good things.